Hey folks, and welcome to this symposium on the 14th of August 2025. I just wanted to spend 2 minutes showing you the back tester. I've been working an awful lot on the ASI algorithm, and I had a bit of a breakthrough yesterday, and so I'm just implementing some of these updates because I was using ATR for some of the features, but you can't use ATR because ATR is it's relative. It's a relative figure, and so I wanted a way to quantify kind of very strong divergences from a mean. And so I had to employ some other stuff, and I think that I've kind of solved that issue, which will result in really or better improved signals. And so here in the back tester, I've added a new section yesterday, and this is the optimization section. And the optimization section enables us to, you can select the algorithm. Buy and sell zones is not yet implemented. So you select the algorithm, you select the data set you want to run it on, and then you can just click on run optimization. It takes about 3-4 minutes to run, and so I shan't do it now, but I've just run one now on synthetic data. And so what this is doing is it's looking at, first of all, what's the objective? We want to look for the best possible Sharpe ratio. Okay, so that was the objective of the simulation I just ran. And so what it's doing then is it's taking all possible combination of the input parameters, and it's trying different settings, and then it runs through the data. How do we do? How do we do? Save it. How do we do? Save it. And so at the end of that, it's got like an array of arrays containing the results from each simulation. Then it displays the best one. And so I've made it like this so that we can see. I mean, this is the first one here, and this is the one that did the best. The score is 3.3, which doesn't mean anything to you, but it's just telling. It's just a way for me to organize these. And these were the settings. The mean periods was 90. The Z modifier was 155. We had the wins are set at 2.5, and we had a couple of other settings that may or may not make sense to you. And as a result of that, then we're able to get these results. And so the Sharpe ratio, which is what we were going for this simulation, is 3.3, which is pretty bloody amazing. And then we have profit factor, which is 1.6, which is also great. We're winning about 45% of the trades. So this is all good. And then we can go down to the data, and we can see we had a start balance of $10,000. We had returns of 63.41 returns, which calculates to about almost 100% returns per year. And all of that accomplished via a max drawdown of about 12.25%. Okay, and here we had a number of trades, 141. We have the winners and the losers, and all the other statistics. And so here you can see this is what it looks like. So we started at 10,000, we ended at about 16 and just over a quarter. Okay, so this is pretty cool stuff. And so if you have for example, let's just take Aussie CAD, and then we can say, cool, we want to look for total returns. That's what we want to find the best combination of parameters for, and then we hit optimization. And I'll let this run a bit. Maybe I'll have to pause it in a second, but right now it's just running through it, running a giant function that combines all possible combinations and then runs it through the data, recording the results of each iteration. It's pretty good. And so this way, what I'm going to do in the future for the dashboard is that I'm going to do a simulation for every asset that we have in here, and we're looking at about, I don't know, maybe 60 different assets, and I'm going to find the most optimal combination of parameters for each one. So oil will look different than the Euro USD, and that'll look different than the Aussie dollar Japanese yen. And so essentially I'll have a giant like a database, like a JSON file that will have, it'll have, for example, the symbol name. Let's just say that it's oil. That's a funky W there. It's oil. Okay, that's the name of the item. And then we'll have, for example, the parameters. And for example, maybe 80x that'll have to be 20. Oops. Okay, like this. And then we have another setting, which is, let's say, percentile. We'll just put P there, and that'll have to be 0.1. Let's say, and that goes on and on and on until we have all the parameters. And so what will happen is before a signal is calculated, it'll look up the best combination of parameters for the asset. So for an oil, it'll look at this one, it'll load all of these here, and it'll analyze the data based on that. We get to the next one, it'll look that up in the table here, and it's going to be a big database. It'll load the settings and it'll run the simulation based on that. And so what you can do is you can train the data maybe, I don't know, maybe once a month, something like that, or once every 3 months. And then you can just constantly update this table so you're using the most profitable combination of parameters per asset. And so this is, I think this is really exciting, and this is a really good way for me to ensure that the algo is configured most optimally for the asset that it is used on in the current moment. And so this is pretty cool stuff. If we have a look now, this is the Aussie dollar, Canadian dollar, the 1 hour, and this is the simulation that it came up with. And so these are the best combinations. So the mean had to be 80. The Z modifier was 135. The wins are 2.5. We have a Sharp of 2.4, and we have a profit factor of 1.47. A win rate 30%. That's not a lot. Let's see what it looks like. And so, despite the fact that we had a win rate of 30%, we were able to get really good returns. And you can see why. Here we have the stop multiplier, which is 1, and the target multiplier, which is 3.5. So if you look at the results here, I mean, they're absolutely staggering. Okay, so we had 124% returns over the course of 512 trades. And so it looks something like that. Okay, and so what I would do is I would take these settings and I would use those, I would add them to the database, and each time I come across the Aussie CAD on the 1 hour chart, it loads those settings and it looks for signals in the data based on those settings. So what I can do here is I can go, apply those, okay, and then I can say go, run simulation, then it's using those settings that it just identified, which gave the results that look like that, which are not bad at all. As you can see, I just ran it. So anyway, a quick update, but it's looking really, really cool, and I'm just building this out continuously because I believe that that this has staggering potential. And so yeah, I'll leave it that for the time being. If you have any questions, please let me know, and once again, thanks for watching.